India and the changing global green order. So we have with us Shri Rajneesh Kumar. He is former chairman of State Bank of India. And we also have with us Jayant Sinha ji. He is joining us from California. He is meeting a lot of green finance guys there in the Silicon Valley. He is about to catch a flight, but he has kindly agreed to be part of a Zoom conversation. And to build the conversation, we have with us Jagjeet Sareen, partner Global Climate Change, Dalberg advisor, plus he is also CIEU's Climate Initiatives Area Chair. Jagjeet, mic is yours. Jayant Sinha ji is joining on Zoom.
Thanks, Anlesh. Very good morning to you all. I see.
He has joined. Sinha sir.
Hello, sir. Good morning from India. I guess you're in US, West Coast, if I'm right?
Is he sitting in the plane?
Anilesh, can you hear me? Is that
Yeah, we can hear you, sir.
Yes, apologies that...
You are in conversation with Jagjeet and Rajneesh ji here.
Okay, sir. He's in flight?
Yes, apologies that I cannot be there in person to join you all for what I think is a very interesting set of discussions. I was actually in San Francisco today because I was participating in a very interesting discussion that we were having at Stanford at the School of Sustainability on what it will take for India to be able to get to net zero future. And we had a very interesting discussion with Professor Chris Field, who runs the Center for the Environment at Stanford, as well as Dean Arun Majumdar, who is the Dean of the Doe School of Sustainability at Stanford. So it was a very interesting session where we brought together financiers, technologists, policymakers across the US and particularly the Bay Area to discuss what is it that India needs to do to be able to move towards a green, sustainable future. So that's what the discussion was. And of course, that made it difficult for me to be there in person for what I think is a very important discussion that you are having in Delhi. So I made 3 points in that Stanford seminar. And let me, in some ways, reiterate them for the audience in Delhi as well. Number one, that if you look towards the Honorable Prime Minister's goal of a $30 trillion economy, a Viksit Bharat at $15,000 GDP per capita, that will require us to invest trillions of dollars in building an energy system and a transportation system that is not only green and sustainable from a net zero perspective, but that is also cost competitive. Because if you look at the kind of investments and the kind of technologies that China has already developed, the US is increasingly developing, that if we want to be cost effective and compete globally, we also are going to have to invest trillions of dollars in our energy system and in our transportation systems and in the industrial sector so that we can compete with these advanced economies with respect to very cost competitive sources of energy, very cost competitive industrial products and services. So while climate and sustainability and air pollution are very important core benefits, the overriding requirement for us is of competitiveness because the technologies that have been developed in the US and in China are much, much more cost effective compared to today's technologies. So it's going to cost us trillions of dollars from a competitiveness point of view to be able to match these technologies. So that's number one. Number two, the bulk of these investments are actually not in the public sector, they're actually in the private sector. And we therefore have to be able to mobilize hundreds of billions of dollars from private sector sources to be able to be invested in the private sector, both debt and equity, to be able to make these kinds of investments that are going to be required across the Indian economy. So this is really, in many ways, the government has already done the heavy lifting. Most of our policies are very supportive, whether we look at it in terms of GST, whether we look at it in terms of production-linked incentive programs, or even the voluntary carbon trading system that the government is putting together. So the policy heavy lifting has been done. Now it's a function of being able to deploy private sector capital and really make these investments to make our economy much more competitive and much more sustainable. So that's point number two. Point number three is that much of this capital will have to come from sources outside of India. We are already, from an investment perspective, an economy that is mobilizing as much as we can domestically and investing it in our private sector. A lot of this incremental investment, which is going to be in some ways almost doubling our current private sector capex, is going to have to come from foreign sources as well. So we have to make India even more open to investment. As the Honorable Prime Minister and the Honorable Finance Minister says, we have to deregulate. And in particular, the challenges are going to be at the state levels, because many of the day-to-day practical problems of investment, whether they have to deal with land issues, whether they have to deal with labor issues, or whether they have to do with the red tape associated with getting factory approvals and permits, really are at the state level, not so much at the central level. So we have to really ramp up our investments. Those investments have to be in the private sector, and they really have to be through mobilizing 50-60% of it through the foreign investment level, and our states have to play a very important role to make all of this happen. The good news in all of this, and I want to report this back to all of you in the US, because I'm just flying back to Delhi in a couple of days, and it's very exciting for me to be able to report, based on my meetings with the technologists here in the Bay Area, is that many of the technologies that are required are now ready for commercial deployment in India. And these include utility scale energy storage technologies like iron air, battery chemistry. These include industrial decarbonization solutions, so we can put them on smokestacks, we can put them in refineries and get really high quality industrial decarbonization. And they also include new innovative sources of energy, such as nuclear fission and even nuclear fusion as well. So the technologies are there. What it is that we have to do now is to put the capital, the talent and the execution to work, so we can scale them up for Indian business conditions, the Indian environments. So that is the overall global picture. And of course, because of all of the turbulence that we're seeing in the global economy, because of the desire that many countries have, geopolitically speaking, to diversify the supply chains, I think it's a golden opportunity for India to take these new advanced technologies that exist, build the US-India energy ecosystem, and really scale them up, not just for India, but for the world also. So exciting opportunities ahead for India. We have to mobilize the capital. We have to develop, the high-scale, large-scale execution expertise. But if we can do that, then I think we have extraordinary opportunities ahead of us in India exporting around the world.
Thank you very much for sharing these insights, and thanks for speaking to us. Well, you have very limited time. I think you're in flight. Just one question back to Jayant. Do you think that a green-focused financial institution could help us aggregate the supply, both from domestic and external sources, and also bring a suite of financial instruments to deploy, whether it's guarantees, loan, and debt or equity, rather than all the institutions picking up bits and pieces of the green mandate? Would a new institution, maybe a new green finance institution, would help us in the kind of issues you are raising?
No, that's a very good question. And Rajneesh obviously is there with you and can describe in more detail what it is that domestic financial institutions need to be able to do. But it is a role that domestic financial institutions and global financial institutions, particularly the multilateral development banks, have to play. Because if we have to mobilize these very significant sources of global north capital, we have to be able to develop at scale certain blended finance instruments. And for that, both our domestic financial institutions as well as global financial institutions and MDBs have a very important role to play. So at least 4 or 5 important blended finance instruments are required. Number one, of course, which is almost the holy grail here, which is the Brahmastra, if you will, if you look at it, in a different sort of mythological way. The Brahmastra here is going to be currency hedging. Because we impose 400, 500, 600 basis points higher cost of capital in rupee financing if we can't come up with credible long-term currency hedging solutions. So that's a very important Brahmastra that we can deploy. But in addition to that, we need credit guarantees, we need concessional debt of various kinds, we need climate insurance, which is another product that is not yet there, but is very much required, climate insurance, so that investors can feel confident that if there is an extreme weather event or something, that their investments will be protected. And then, of course, on the equity side, we have to come up with appropriate ways through first loss capital and so on, junior equity, senior equity, appropriate blending together of commercial capital and concessional capital, so that whether it's a capped return structure or a first loss capital type structure, so that even on the equity side, we are able to create the blended finance instruments that can truly scale and enable us to mobilize these hundreds of billions of dollars of capital that are required. So it's not a question of $1 billion here and $1 billion there. We have a $4 trillion economy. The scale at which we have to deploy these new solutions is a scale of $50, $100 billion a year. And that's why we need very large scale financial mobilization. We need very large scale blended finance instruments. And one of the things that I have been advocating for a long time, and of course Niti Aayog and others are now seriously considering that, is a specific green bank, a green financing institution that can enable us to blend together concessional and commercial capital to enable this large-scale deployment of capital to happen. So that's why financial institutions have a very, very important role to play in mobilizing these very large pools of capital.
Thank you, sir. Thanks for reinforcing the need for such a theme-focused institution which would cater to this need. The other side of the climate story is, of course, the climate impacts and our adaptation and resilience response. What is your view looking at external sources of capital? Are they remotely interested in funding adaptation projects in India, or how do we go about bringing large amounts of money, deeply concessional money for adaptation projects?
Yeah, so if you look at many major capital sources, particularly when we look at the DFIs like British International Investment or the World Bank, adaptation for them has become a very high priority. Because as it's getting hotter in India, for example, they're realizing that mitigation solutions are going to take a very long time, and they may not even be able to deal with the kind of challenges that we have in front of us. And what I mean by that is that no matter what we do on the mitigation side, we are going to see an increase in global average mean temperatures of, let's say, 2 degrees centigrade. If that happens on average, we are going to have a situation in the summer in northern India where we are going to see increasing heat waves, increasingly high temperatures over 45 degrees, approaching 50 degrees, lasting for a month at a time. And there is no escaping that, no matter what we do on the mitigation side. Therefore, we have to be able to do a lot more in terms of adaptation to be able to deal with these kinds of climate issues. In addition, we will also have extreme weather, whether it's droughts, whether it's floods. All of these are also going to happen, and that also is the resilience and adaptation set of requirements. Therefore, we would like to be able to allocate more capital for adaptation and resilience solutions. From an investment perspective, however, it's very difficult to find high return opportunities or sufficiently high return opportunities so that we can invest in adaptation. There are a few. So for example, people are looking at high efficiency cooling. People are looking at ways in which we can make buildings more efficient. So there are some commercial applications where the returns are adequate to justify the high levels of investment required. But it's limited, it's not across the board, and certainly the most vulnerable populations are not going to be able to find private sector solutions for their requirements as well. So adaptation and resilience are going to be very, very serious issues for us as we move forward.
So just taking the issue forward, and here we want to benefit from your experience as a chair of the Standing Committee on Finance, and when you were MOS, Finance Ministry as well. You know, most of the hard asset, infrastructure assets are owned by government, federal or state. I'm talking about all the roads, the railways and others and others. And, you know, if you look at estimates, even CDRI, the Coalition for Disaster Resilient Infrastructure, their estimates are 20 billion average annual losses. That's what India is staring at, if not more. So from a government perspective, is there a realization that we have to invest more on reducing vulnerability, put a delta on the maintenance to make them these climate proof? Is there a view on issuing resilience bonds? Just maybe help us with a bit of an insider government thinking, if you may.
The government fully understands, what the requirements are. And particularly for climate insurance, for instance, we've already had to deal with it because of what happened with Teesta 2, with the 15,000 crore hydropower project being completely destroyed by glacial melting and being completely swept away. It's become very, very clear to us from a government perspective that we have to come up with climate insurance solutions, and we have to be able to create deeper pools of insurance coverage so that we can deal with these kinds of extreme risks that we have to underwrite. Now, can we get reinsurance so that we can protect our insurance companies to underwrite these kinds of risks at a sufficiently reasonable premium? That is a very big question mark that the government is also confronting right now. We have to come up with innovative structures by which we can have different layers of insurance so that, a general insurance company writes the premium and insures it up to a certain extent. Then it goes to these reinsurance pools, and we try and get these reinsurance pools to cover some of it. And then ultimately, government has to be the insurer of last resort. So how do we structure these insurance mechanisms so that we can insure against this kind of very large scale issues is a real problem. Folks, I'm going to have to sign off now because, as you can see, I'm on a flight. The flight is taking off here in San Francisco. So please excuse me, I'll sign off. But
thank you very, very much,
set of issues that you all are discussing. And obviously happy to get into them in more detail when I'm back in Delhi. Thank you so much.
Safe travels. Thank you very much, sir. Salute to his commitment to this cause.
It is amazing. You're sitting
time
on the flight and then.
So with that, let me bring you in the conversation. And you managed the largest bank in India, and you remain committed. You're part of various boards of financial institutions. You are on the board of CIU and driving the green agenda and financial agenda here as well. So let me bring your perspective in. Today the discussion is focused on NBFCs, but let's start from the bigger beats, the bigger banks. How do they see climate? Is it still one of the sectors, or have at the board level they've embraced that, this is the growth engine, green and digital, two growth engines, and they have to go whole log, stock, barrels and build their own capacity, build the ecosystem. It won't be that easy, but they are committed. Just give us a sense of the board's perspective of these large financial institutions in India.
So any institution, whether it is bank or NBFC, obviously as the economy develops and the priority develops, they get realigned. And the capacity also gets developed. As was mentioned earlier that up to, say, mid-90s, banks did not have capability to do the project financing. It was all done by IDBI, ICICI, IFCI. And banks were doing only the working capital finance. But over a period of time, and particularly you mentioned about the State Bank of India, we started our project finance division sometimes in 1990. And today, after, say, 30 years, State Bank leads in project finance. So they have developed capability over a period of time. Particularly about the green projects, so all these developments are new. up to 2010, when India was short in terms of power generation, we had huge power cuts. Then the projects which were coming were all thermal power projects. And huge capacity got added between 2000 and 2012-13 in thermal. At that time, the solar, it was a very costly affair, and the cost of production or cost at which a consumer can get power was in the range of 12 to 14 rupees. In fact, our Prime Minister, and when he was Chief Minister of Gujarat, and Gujarat was the first state to do a PP at 12 or 14 rupees. So he had that foresight. And now, in the last 5 to 7 years, India has done commendable job in adding solar power. So the point I'm making is that it is sometimes a demand push. What is the demand from the economy, and how, as supplier of capital, the banks formulate their policy. So it is a constant process, and now the climate change or climate financing or transition financing, they being on the top of the agenda for every government and the society. Obviously, banks cannot be oblivious to that. And that's how the regulators, they are playing their role in guiding the banks, nudging the banks, formulating process. And similarly, the banks, when they look at their governance structure or their strategy or their risk management, that work is going on. And ultimately it gets aligned. If there is a demand today for solar power projects, then the financing is being available by the bank. For any institution, whether it is development financial institution, NBFC or bank, when you are providing finance or loan, ultimately the risk assessment and from where the loan will get repaid, that is the underlying. And rest, the risk matrix from project to project differs. For every project, the risks are different. When you're financing a road project, the risk matrix is different. When you're financing a thermal power project, risk matrix is different. When you are financing a solar project, risk matrix is different.
Sure,
so
sir,
certain risks are common.
Yes, sir.
And there are certain peculiarities or specialties to a particular.
But can I ask you a specific question there, sir? Coming from the finance world myself, we say, a good project always gets funding, and a project would be analyzed, assessed on its merit and all that. But if we take a view that green is a growth opportunity sector for us, we can also achieve Atmanirbharta, economic growth, lots of jobs, and, many people could make money out of it. There are various examples from even developing countries where they have pumped in a lot of money and made a supply push and creating demand while managing the prudential requirements of the lending, but still they were not reacting to a demand, they were creating demand. And in the ecosystem, we have seen RBI is pushing in certain ways, SEBI is pushing in certain ways, Ministry of Finance. Do you see we have the pace, or are we going to miss the bus again and we would be reacting? Because if I just give an example of PBOC China, they provided, maybe they're still providing for the last 10 years, 300 basis point reduced credit to all big banks on a list of things which would be financed automatically. So they were driving it through supply, and now we know China is dominating most of the clean tech companies. Is there a view to drive the curve rather than responding to the demand?
Yeah, but who drove that curve? That came from PBOC or what you're mentioning, the government. For the banks, who are the intermediaries. So ultimately, they have a cost of deposit. They rely mostly on deposit. And then they have to pay the depositor and they have to earn margin. So any incentivization, that mostly comes from the government. Even today, what is happening? If it is a certain push, then it is coming for manufacturing through PLI.
Yes.
So, or if there is any subsidy for your farm credit, it is coming from the government.
Or the PSI.
Or the PSI. So for the bank, they can keep their margin low, but ultimately they are responsible to ensure that the depositor's money is safe And ultimately, they have their own shareholders. They have to ensure that they give adequate return to the shareholders. Otherwise, if they don't give adequate return to their shareholders, who will provide them capital? So there are various stakeholders. But if you say that subsidization or push, an institution on its own, other than government,
Won't be able to do.
won't be able to do.
No, you're right, you're right.
Because
It's not SBI's job to keep pushing the green agenda.
no, I won't say that, pushing the agenda, but if we are talking about incentivization and disincentivization, can we think of a policy where you say that thermal power plant, I will charge you higher, and for a solar plant, I will charge you low. But it doesn't work that.
Of course.
Because ultimately, the end consumer is neutral. Whether
look for
he is
affordability.
getting, for him affordability, whether it is getting power, he doesn't even know that power, whether the power I am consuming at my home, whether it is generated by hydro, nuclear, whatever the source, I am whether getting it at 5 rupees or 6 rupees or 7 rupees, that is what matters to me.
Yes.
So ultimately, and when we talk about the neutrality or grid neutrality, that the power, cost of power, at the end consumer, it has to be at the same price. You can't do differential pricing. If you can't do differential pricing for the consumer, then how do you differentiate or do differential pricing for financing?
Yeah, although Macron is trying in France, and it's not making him any popular, where they are introducing a differential lending price for green and non-green ones. But anyway,
But these are all then regulatory or government or...
it has to be driven by government.
Government, yeah. But if you ask me, if we say that the consumer will get solar energy, or the entire,
You're right.
the Prime Minister, this is entirely on this, that consumer benefits by putting solar rooftop.
Yes, you're right, you're right.
So the financing world, in the world, ultimately somebody pays.
Of course. So maybe for benefit of the audience, many of you are running various NBFCs. From your experience, what are the various ways by which we could incentivize NBFCs to lend more for green?
So that's what I'm saying, that if you want to incentivize, ultimately
Or
somebody
how
has to
we
bear the cost.
Yes. So
But for NBFCs and the banks, they have their own strengths. And I was listening to the discussion about this. So banks are the only institutions which have the capability to mobilize deposits. NBFCs regulation discourages, or almost the license is not available for deposit taking. So ultimately the deposit is all coming from the banks. The way forward which even RBI is thinking and pushing is around the co-lending. So that is one model where we can leverage the strength of both. Definitely NBFCs are better at providing the last mile connectivity and maybe at a cheaper cost. The cost of operations for the banks is high. So whenever you want to have a successful model, there has to be an arbitrage. So NBFC, the arbitrage can come through lower cost of operation. Because what is the end purpose? End purpose is that whoever is receiving money or the borrower, whether they receive money at a
cheaper cost.
At a cheaper cost. So cheaper cost can come from where? One is your operating costs are kept. Your cost of funding is kept low. And that's why the co-lending model, although it has not so far taken in a big way, but I believe that we need to fine-tune that model. For that model to succeed, we need standardization. If co-lending, it is not that one NBFC, one bank. There has to be standardization where all banks, all NBFCs, the form for lending is the same. And it has to be seamless process. So the origination can be done by NBFC, post-loan servicing can be done by FCL. And it serves the bank also well because their operating cost is high, so they can rely on lower operating cost for the bank. Bank has access to cheaper capital because they take the deposit. And that's how we can create a model where the borrower gets the money, so the flow of credit improves, and at the same time the cost is not very high. So that is one model, and as I said that the RBI now again has come out with draft guidelines, latest,
Yes, sir.
the policy, monetary policy statement. These are draft guidelines. I'm sure with the with some feedback, whatever feedback goes, and the final guidelines will be issued. But under our country is a large country, it's a capital deficient country, so the capital from whatever source it is coming is
welcome.
welcome. So here I have a slight difference with Ashwini ji when he says that foreign capital and we have to be self-reliant. But the fact of the matter is that we are a capital deficient country. Our household savings rate is lower when compared with China. There is a huge 10 basis point. Our savings rate is 30 to 35%. China is 35 to 45%. So when we have a lower savings rate, international capital, it is and should be welcome. The quality of the capital and how do we manage our external liabilities, that is where I would say that India has done a fantastic job. RBI has done a fantastic job in terms of attracting quality capital through FDI and the guidelines which Reserve Bank has on external commercial borrowing, where the long-term capital is encouraged and short-term is not.
Thank
we
you very
need
much,
capital
Yeah.
from wherever it comes. It should be allowed to come.
It's welcome. No, that's interesting tension. I think we should discuss through our deliberations during this day, because you know what Ashwini ji is saying and what practitioners are saying and even policymakers, there is a tension there, and we need to recognize, but also recognizing that we need trillions of dollars to grow our economy, let alone net zero, but just to grow, and bringing it together and drive the growth engines of digital and green. Second, I think we would encourage through the day if we can deliberate on this question of do we need a green-focused bank or financial institution. And third is what Sir just mentioned is new proposals where NBFCs and banks could start working together seamlessly in a standardized, low transaction cost way so that more credit is passed through the system to the end borrower or consumer. With that, we could wrap up this session. Thank you very much, sir, and thank you very much for patiently
Thank you for inviting me.
Thank you, Rajneesh ji. Thank you, Jagjeet. Just hold on. May I request Raman Agarwal ji to come forward and express gratitude. Rajneesh ji is always a support. तो दो ना ग्रीन इसी का तो है. Thank you very much. Thank you, Rajneesh ji. Thank you, Jagjeet. And you know, from bottom of my heart, thanks to Jayant Sinha. He's always a great support, good friend. And we have seen the commitment he has not only for green but also for CIEU, that from almost running